Welcome to the Monocle Banking Podcast, curated by Monocle Solutions. This week, NAMPO is in full swing in Bothaville, so the focus is on farming and finance. Now, South African agriculture has had one of those classic South African moments, a sector that is simultaneously one of the economy's great bright spots and one of its most exposed fault lines. After a difficult few years, agriculture rebounded sharply in 2025, with Stats SA recording 17.5% growth in agriculture, forestry and fishing. And it really helped lift overall GDP growth to 1.1%. But anyone who spent time with farmers knows that a good season is not the same thing as structural security. It may improve the cash flow statement, but it doesn't repel some of the other risks like weather and animal disease and logistics and currency volatility and all of that. And then there's the small matter of keeping a multi-generational family business intact when the family itself is increasingly scattered across continents. And right now we see that risk register is filling up again. There's obviously concern around the La Nina pattern, which has developed and helped deliver better rainfall across parts of southern Africa. But that may be giving way to El Nino and even a super El Nino. And so for South African agri, that raises a probability of below normal rainfall. And then there's obviously foot and mouth disease. We've been battling a serious FNB outbreak with reports that additional vaccine doses are being brought in, and a further 4 million doses having been ordered as well. So against that backdrop, what does resilience actually mean for South African agri-businesses? And it really is tempting to define resilience in the old way: rain, yields, land, working capital and access to markets. But Eric Enslin, the CEO of FNB Private Bank and Advisory, argues in a recent release that for farming families, resilience now also depends on how well they manage money and ownership and succession when different members of the family live in different countries and continents. So, Eric, it's great to have you on to the podcast and to talk about that a little bit more broadly. But firstly, if we just look at the sector as a whole, we're now looking at a sector that has really fired on all cylinders over the last couple of years. When you speak to agri families, does it feel like a sector building confidence, or a sector that's learned to kind of treat volatility as permanent?
Yeah, thanks, Michael, and good afternoon to all the listeners. Just from our perspective, one of the disciplines and the client segments that we have that I've got most admiration and respect for is definitely the farming clients and community, because, many of the outcomes they don't control, and it's not at their mercy. To your articulation, whether it's climate and the volatilities that we see, or, trade, or different market access points, or diseases, or etc. And then they need to deal with the economic pressures too. So certainly what I've seen over many years in our farming community and client base is a group of people that's very resilient and understand volatility. I think of all the client bases that we have, they understand volatility most probably the best. And some, from a local perspective, have obviously known how to manage that across different aspects. But we've also seen of late, which is a positive, our agri and different sectors of agri at different times have contributed to growth. But what we've seen with new markets opening up, and many of our clients the farming operations tend to be family businesses. So extended families, whether it's fathers and sons, or brothers and sisters, or granddads, etc. As they grow those businesses, they invest back, and new markets open up, and kids go overseas and study there, and some go and live abroad. It's the last couple of years, what we've seen, a total different dimension of planning that needs to be considered is this cross-border context. Not only from a family perspective, but many of our farmers have now direct access to markets. So suddenly their income streams aren't only in rand, it's other currencies, be it dollars, be it euro, etc. Now suddenly that tax and planning and succession and cash flow and ex-con regulations, etc., put a different dimension on the business side, if that makes sense, of the farming operation. So, but again, I think this is all positive. Our agri, despite all the challenges, our agri community is resilient and the market is doing really well.
Very interesting to hear that, almost by default, the modern South African farming family becoming a multinational family enterprise. not just the kids maybe studying offshore, but also access to those new markets, as you say, even when the primary productive asset's still very much local. When you look at the best run agri families in South Africa, what distinguishes those that are genuinely resilient from those that are merely asset rich?
Yeah, I think what is most probably important is they have strong foundations. And one of the biggest things that I've seen, because of the volatility that brings, is they have structures in place to appropriately separate their sort of farming operations, if that makes sense, from their family wealth and the needs of that. Because often, where the challenges come in, if there's no clear distinction, and as you know, depending on what type of farming operation, sometimes you have a bad season or bad crop or climate and cash flow, or you need to replace some capital expenditure. Or on the family side, you have suddenly some family member that needs to retire, or there's overseas study costs or medical costs. And if you blend those things and don't plan for it properly, Michael, that's when the guys run into trouble. And where you say, where I see the families that do really well is they've got sort of, we call it, there's a couple of principles that I can see families that run it properly. So they split, and there's a clear distinction between the farming operation and the family wealth, if I can call that.
Right.
There's clear succession plan and how wealth and farming operation will transfer. Because remember, it's usually very capital rich and not necessarily liquidity is not always the issue, cash lying around. There's clear governance in place. Sometimes people think governance are only for large corporates or etc. But where you have these businesses and farming operations like that, it's clear how people will take decisions, when and how wealth will transfer, information will be shared. So there's clear guidance. Some of these families that comes to mind, they've got family constitutions. So they will sit every 6 months or once a year with their advisors, and there's a constitution. Because not necessarily everybody in the family might be involved in the family operation, right? So how do you benefit from proceeds? Tax is a big consideration on two fronts. Obviously, you have your future wealth generational and estate duty and that perspective, but also from an international perspective. How do you navigate that? So there's lots of dimensions. It doesn't have to be super complicated, Michael, but it is just important that I see people plan for it properly and they've got a proper foundation in place.
Yeah, and there's that structure, absolutely, because if you don't, you can see families typically blurring those lines and maybe the farm being treated too often as an ATM. What would you say are the warning signs that family lifestyle, maybe the offshore education or property purchases or retirement needs are beginning to compete with the reinvestment needs of the farming operation?
Yeah, and I suppose that's where planning comes in, Michael. So depending on usually, the successful farming clients, they understand exactly the demands of when certain harvest capital, when certain equipment must be replaced, etc., etc. So they typically plan for that, but then sometimes what happened is people don't diversify enough. Often something we see, there's opportunity that they want to import something or they need overseas transaction, and then suddenly they run around to quickly externalize money. Now, often that's then more expensive or it's inefficient.
Yeah.
Right. So we say plan for that, even cross-border. So, from recently after the most recent budget speeches, etc., our South African residents, that's tax status is all fine, can have now your 2 million annual allowance. In addition to that, you have a sort of a foreign direct allowance up to 10 million, subject to a process. So we advise our clients and they have these buffers overseas. So that's, again, make then that flow of money efficient, plan for it properly. So it's all about planning. Then make sure you have the right advice and specialists to come into play, right? The one thing that we often see, people don't provide well enough in time. For instance, they want to now pass on to the next generation. Okay, so now how do you do that? Because now the parents must now retire, so they need a certain amount of cash flow out of the farming operation, which they might not be provided for. Or it sits in a specific structure. Now to transfer it to the next generation, there's a capital gains implication, etc. So it's just very important to get the right specialist advice and start to plan. And then these foundations are strong. And then it's efficient and people have that peace of mind. Right?
Yeah, especially with tax. And I think, our residence-based tax system means that if residents are generally taxed on worldwide income. And when a
Correct.
child is maybe studying or working abroad, but still linked to the family farm, at what point does that tax residency then become also a serious planning issue? So there's lots to consider. How often do families assume that because the farm is in South Africa, the planning is purely South African, when in fact things like beneficiaries and distributions or future inheritance may pull in other jurisdictions?
Yeah, I think in most instances, people don't consider that in the planning. It's often it's like farming, many of our entrepreneurial clients, because if I ask farmers or many entrepreneur guys that run their own businesses, they know their industries very well. And they will always say they can make more money out of either their farming operation or their business than any investment specialist can. Plus, they understand it. So what people tend to do, they invest back in their farm operation, right? And there's nothing wrong with it. Buy the neighboring farm, start another crop, expand to another different type of farming, and which is fine. The only thing, it's not diversified enough. And then sometimes there's not sufficient liquidity, or they don't do it in the right structures. And then at some point, something happens and they need cash or liquidity, and that's not available. Or alternatively, they missed another opportunity now, especially now with offshore. People don't even consider that, never mind local investment. So we sit with our clients, have a proper plan, understand the farming operation, understand their personal family structures, understand diversification, understand what their future plans, albeit that they might change, future plan with the farm is. Often what we see now, Michael, also playing out, we have very successful farming operations where the kids went into professional sort of careers, locally or abroad, and they're not going to, so there's no succession for the farm.
Yeah.
Then suddenly the farming client needs to retire and needs cash flow out, and now suddenly they didn't plan properly, and now they're under pressure to quickly liquidate or sell the farming operation in an under pressure situation, right? Because they haven't provided properly during the farming operations for investments, etc. So what we see, many of our farming clients successful once they diversify, you'll find they have a property portfolio outside of the farm, which whether it's commercial or residential or whatever, they've got offshore assets, local assets, they've got exposure to the markets. And that, again, create that balance and that foundation.
When it comes to succession, I always think it's quite tricky, especially with farming. How do you avoid that kind of classic succession trap where the operating heir inherits responsibility while the non-operating heirs inherit claims? And should farming, you come back to that constitution that you mentioned, should farming families be a bit more explicit about whether the intention is to preserve the farm as an operating business or monetize parts of it as certain events become triggered, like a retirement or something like that, or treat it as a family legacy asset? Is that the kind of thing that really needs to go into the constitutional planning up front?
For sure. It's extremely important. One farming operation and family comes to mind that, there's sort of between 10 and 15 family members involved in the farming operation. Some of South Africa's largest farming operations are like big corporates and businesses. Yeah. Right? People they integrate it backwards. They sometimes have their own transport. They do their own distribution. They're processing, etc. So it's like big businesses. I don't just call it farming. Now, again, that family constitution will say, okay, so on what basis do kids or second generation kids come into the business? What are their salaries? When will they be promoted? When will they get shareholding? Who will dilute their shareholding for this, in what structures? Succession planning, who ultimately will take over? How do these decisions, if you have 3 or 4 family members involved in a farming operation, if there's a difficult decision to be made, do we buy, do we sell this, do we expand? How do you make those decisions? And that's where those constitutions anchor the family, because again, it's also family. And that notion of, family and business doesn't gel well around the table. So, and we've seen that, and we've seen it really, if it's done properly in advance with a good constitution, the family well-being tend to be also in a better place than otherwise, the stresses that that the decision making in the business bring into the operation, because then there's no clarity, right? So
Yeah. And again, because often I think, and you're talking about a specific type of family business in a farm here, that you do often find so many individuals from the family involved in the business. You've got to get the drafting right, because you don't want it to be so bureaucratic that you kind of paralyze some of the decision making, which is generally quite agile and has to be in order to navigate volatile environments like you do. But at the same time, ensure that everyone is aware and properly aligned and all of that kind of thing. When you look at the role that you play as the bank, and private banking has historically been associated with lending and wealth management and convenience, all of those kind of high touch things. But your argument is really about integrated advice, if I'm hearing you correctly here, across all of these domains. How has the role of a private bank changed for agricultural families as you've seen it over the years?
Yeah, look, I think quite a lot. So the one realization it's always been, and irrespective of what industry you're in, there's very few, if any, financial decisions that any of us will take that do not have an implication on something else. So whether in a farming operation you want to buy the farm next door, or you want to sell something, let's take a buying decision. So you need finance. So what's the cash flow implications? In which entity will you buy it? What is the insurance implication on this property? What's the tax implication? What's the future? So you can see how these things are all integrated. There's nothing that is just a standalone, make the decision and everything else stays in place. So I think the advice and the expertise and inputs that all our clients needs to be, it's more integrated, because you have flow of money, banking activities, how are you going to finance it, diversification, tax, structuring. So I call it always, you have banking, investments, lending, insurance, structuring, fiduciary, and all these things are interdependent and interconnected. And that's maybe the right way of explaining it. No financial decision is a standalone decision.
Yeah.
Even today, if you decide to buy a car, a new farming equipment, okay, how are you going to finance it? Cash or borrow?
Yeah.
Okay, so there's implications. That item needs to have to be insured. Who and how you're going to insure it, and what that insurance, what implication is that going to have on your cash flow? So in which entity do you buy it? Do you buy it in an asset holding entity, in a trading company? That's the other thing. Many of our farming operations started off, that people didn't realize how successful they might become in the future. So they start the farming operation in their personal name. And then eventually they got another farm and they build up, and then realize one day, we should have put this in a company structure that our family trust holds the shares, but now I can't do it because there's capital gains implications. And how do you get it into a structure, be it a trust or company? And then it becomes costly.
Yeah. And again, why you want to ultimately get these things structured correctly up front. There are ways around it, but it does often come with cost, as you say. Do you think the bank needs to understand the farm's operating cycle as deeply as it understands the family's personal balance sheet, given how often very closely aligned and intertwined they are? And then also, how do you price and structure credit when the borrower's wealth may be significant but illiquid, and it's seasonal and exposed to climate or disease or FNB, all of these things?
For sure. And that's why I think, in many instances, we really see it as a partnership, because then you can also understand, and there's deep in our agri space, and that's deep specialization there. Because if you take, for instance, Michael, certain farming sort of categories, let's say macadamias, you have probably, if you start with that, you most probably, and I'm not by all means, people mustn't hold me to this, but I'm not an agri specialist, but you're looking at 7 to 10 year time frames for your first harvest if you start out, right? Now think about that cash flow and capital expenditure. Now, what banking partner is, and your finance partner, not all call it your banking partner, need to understand that industry proper, and how are you going to do that? So I think it's near impossible to give the right advice and walk the journey if you don't really understand the farming operation and because the harvest cycle, it's not many of these operations, very few are actually regular income based. And then many of our farmers also need to understand its market prices, especially international. So what at a certain given point in time, what's the price of maize versus, let's say, meat, etc. And that the price might go up closer to the festive season in certain industries. So people want to hold back, but that might put pressure on your cash flow. Your finance partner must walk the journey with you and understand it. So we certainly try to be a partner.
I just wanted to find out from you, are we seeing, I often think that generationally, and we have it in the land debate in South Africa, where everyone thinks everyone wants access to land. But if you see a lot of the surveying that's done, generationally, we see the shift to the younger generations wanting flashier, call them sexier jobs. And, they don't necessarily want to be farmers. Are we seeing a generational shift where younger family members want exposure to maybe more global careers and assets, while the older generations remain maybe a bit more emotionally and operationally tied to the land? Just broadly, what is your sense on how that succession and transition is going in South Africa's agri sector?
Yeah, I don't think it's I certainly don't see a clear cut one that the next generation don't want to be in farming or whatever. I think it's very, very farming dependent and very specific to families. I think you need to be a special person to be very successful in farming and the challenges that goes with it. But I can't say that I see there's a clear tendency that the next generation don't want to be in farming. What I do see, Michael, is that lots and more of the next generation actually get tertiary qualification, more so, and it can be in specific agri fields or related. We can see that the next generation bring a different dimension into farming from a technology perspective, and so versus traditional, let's call it very traditional farming. And I think that's an interesting and very exciting part.
Yeah.
Different approaches to things.
Yeah,
right? They bring, you can imagine granddad versus second generation, and now you come with technology and different view of looking at things versus
drones
how
in
we've done it
macadamias
15, 20 years ago.
Yeah.
Correct. So I think that's exciting. And I think it bodes well. I think there are people that really farming is in their veins. And that's good to know. As a country, we need it, right? So
our farmers are our heroes.
We support agri.
I often think, and I look at the farming sector, which gets very little support, comparatively speaking, from government to other agri sectors around the world. If you look at the US and Europe and France and elsewhere, and yet our farmers, Boermakeplan is there, and it's famous for a reason. They are famously resilient. We're opening new markets in citrus, as you say, macadamias. In fact, I was interviewing the founder of Butternut recently, and he comes from a macadamia nut farming family, and they're now helping him branch out into supplying these healthy nut butters and nut milks and whatever into some of the major retailers. So they're diversifying, they're innovating. You've got drone technology like aerobotics. Really is a phenomenal sector. So if you're a farming family, just wrapping this up, listening to this and thinking, right, well, we've got some of these issues. We've never really put them into one plan. Where should they start? What are the 1 or 2 or 3 documents or structures that every cross-border farming family should be putting in place or reviewing immediately?
Yeah, I think the first thing is one need to go and assess and say, listen, do I have the right advice and people that partner with me on this journey? We are the gaps, because I think that's quite important. That's the first point. Then the second point, one need to start to understand and say, okay, what are the future plans? Where am I with my farming operation, right? So think about the succession. Do I want to expand, scale down? That's second point. The third point is you need to obviously understand the capital structures. What is the debt, not debt? How's that optimized or not? And I think, so it comes down to tax optimization, your capital and liquidities, your succession planning linked to your family, and nobody can farm forever. And if you stop farming, what then? Do you sell? Is there somebody to take over? If somebody take over, will they pay you out so that you can go and rest and retire? So I think those are the things. So liquidity and capital structure, your tax efficiency that goes with it, and then your future succession transfer. Those are the 3 things.
Brilliant. Eric Enslin, thank you very much, CEO of FNB Private Bank and Advisory. I think the one thing is clear is that the farm may still be rooted in South African soil, but the modern farming family is increasingly spread across different tax systems and currencies and generations. And as we've seen with climate risk and animal disease and market volatility intensifying, Resilience isn't just about what happens in the field. It's about what happens in the family and the balance sheet there, and the will, the loan facility, the offshore accounts, and those governance frameworks as well. That was the Monocle Banking Podcast, curated by Monocle Solutions. I'm Michael Avery. Thanks for listening, and don't forget to like, subscribe, and share with your network. Until next week, take care.